Good morning and welcome to Signal Centre's Talking Bull. Today is the 19th of April. I'm Steve O'Hare and I'm here. You've got me on my own today, and we're going to go through the news headlines, get straight into it, and then go into the technicals. Please feel free to reach out and in the various channels that we stream to, ask any questions or ask me to take a look at any markets that you are really interested in, and we can give you a technical outlook on it, and then we'll have a little bit of fun later with our gun to head trade idea, although it hasn't been fun for me recently, but we'll dive into that in a short while. So let's kick into the news headlines. Setback. The German ZEW economic index expectations retreated to 4.1% for April from 13 the previous month, and below consensus forecast of a further net recovery of 15.3. The current conditions component, however, did recover to negative 32.5 from negative 46.5 and above market expectations of negative 40. US housing starts were little changed at an annual rate of 1.42 million for March from a revised 1.43 million the previous month, and slightly above consensus. St. Louis Fed President Bullard stated that US recession predictions ignore the strength of labor markets and that interest rates need to increase further, given that there has not been much progress on inflation. He added that interest rates in a 5.5 to 5.75 range would be adequately restrictive. Markets overall were held in tight ranges on Tuesday with a lack of major developments. Equities and yields overall were little change, which also dampened activity in currency markets. Euro-dollar unable to challenge the parity level. Canadian, actually I've got like one level on there. Let me have a little butchers at that, because Joe is normally the man for the foreign exchange markets. 110 level that should be. Sorry about that. Don't want to frighten everyone this early in the morning. I thought it didn't look quite right. Sorry, reading some headlines here. Canadian headline CPI inflation rate declined to 4.3% for March from 5.2 previously, and that was in line with consensus. While the UK inflation headline this morning declined to 10.1% for March from 10.4, but this was still above expectations. We expected to get below that double-digit level. The core rate was unchanged at 6.2 and above expectations of 6%. So that is where we are. Let's dive straight into the charts. Here you can see I'm looking at Euro-dollar, panicking that we're at parity. We're not, so we can relax. We can go back to bed. Right, let's dive into Bitcoin, which had a much better day yesterday. We have had a little bit of a pullback since we made those highs last Friday. We actually got down. We made a new low yesterday, a new low prices we haven't seen since last Monday. Got down to 29,122. We said there was a little bit of support around that level, and it's bounced really nicely off it. In fact, it's actually formed a bearish outside candle, which is really positive. Now we've pulled back slightly this morning, but still sitting quite nicely above 50% of yesterday's range, which is always a good indicator. If we take a look at the short-term charts, we can see that we are above the Ichimoku cloud. We reacted off the base of that, and that was on Tuesday, and pushed nicely higher. Are we almost forming a little bit of a bullish flag here? This is how we draw it. This is how we do it. Bullish flag, and this is the pole here, and we look to project higher than that. So measure move target, if we manage to break that flag, would be, well, we'll put it there. That's a conservative target, 31,376, which will supersede this year's high. Ethereum, that didn't do so well. It did well yesterday, but it's sitting back on its haunches a little bit. We've finished a 5-wave impulsive move higher. We're going sideways now in price action since last Friday, and really nothing to shout about. Resistance comes in between 2130 and 2150, and support below around about that 2050 level. So they're the real levels to watch during the day. XRP has pushed higher again, reacted higher from Monday's low, swing low of around about the 50-cent level, and managed to push up through 50, well, just stalled at 54 yesterday, 54 cents, and reversed sharply lower. Still above the Ichimoku cloud on 4-hour chart, so still a little bit of positivity in there. Taking a look at commodities, we'll take a look at gold. Gold is definitely one to be watching at the moment. We've had a really decent rally out of it, and we've stalled at 2050, so $25 short of the all-time high, and reversed sharply lower. That was last Friday, and we've maintained this negative sentiment throughout the week. Really, we had a little bit of a bright spark yesterday, but we've given up those gains already. We've got this like small 9-day moving average. That's a simple moving average. That's quite a nice one to watch. There's others as well, but the major ones, 200-day moving average all the way down around about $1,800. So we're under that at the moment. So we have really got to watch this support level that was formed around 1981, not the year, the price. And also we had this breakout of the triangle formation. We have broke out, and the measure move target of that triangle formation has been hit. So it's like if you look at a triangle and you extend that, let me show you. This is the triangle here. Extend it higher. The measure move target for that was 2055. Got up to 2050, so not far away. But obviously the Friday's reversal has sort of dominated price action, and if we look at the weekly chart, the higher time frame, that showed a doji candle, the real sign of indecision. So a real battle going on now. Dollar index still trading around that 102 level, just short of it at the moment. So really looking for cues from that to see whether we can maintain this bullishness. On the short-term chart, however, it doesn't look like it. It looks like we are in danger of breaking lower. We're in the Ichimoku cloud of the 4-hour chart, and we've nuzzled our way through it this morning. Nuzzled? Weird word. We've been down to 1987, and as I say, 1981, the level to watch. Above, if we do manage to get above back above the 2011 level, that would make me much more positive on this, and make me think that we have an opportunity to retest those highs. Taking a look at crude oil. Now, this is the one I'm fuming about yesterday. I went short of this in the gun-to-head trade idea. We'll show you what happened later. Really not happy. Got a little bit greedy. Went for a big humdinger of a 4-to-1 risk-reward trade idea. But if I'd have been a bit more conservative, I would have done okay. Anyway, that's all I've got to say on it for the moment. 200-day moving average in the WTI crude oil prices have been capped over the last week by that serious moving average line. We're back below previous resistance, which turned into a bit of a support, but not for long. The real place to watch on this, or the level to watch on this, we've got Wednesday. We've got all inventories out later, so let's keep an eye on that and expect more volatility there. That'll be a good indicator. $79 in WTI as a support. If we do manage to break that with any serious momentum, then we'd expect a type of vacuum move down towards that 75-70 area. That's where we saw the gap up from the end of March to the start of April. Over that weekend, we saw a big gap up in the charts. Brent crude oil still trading at a premium. Premium is less than it's been for a while, $3.63. And again, we're bang on that support level and looking to move to break lower, really. If that's what it feels like, it really has a little bit of a turning point, and that OPEC plus nations paring back on output has had a bit of an impact, but is that starting to seep out of the market now? Maybe a little bit of realism and cracking in, and really need to see whether we can overcome this support level at the moment. 83.40 on the upside. You've probably got 87.18. That's the swing high we've had over the last week or so. Let's dive into FX, take a look at really what is driving these markets. Take a look at the dollar index to start with, and we can see there's positivity in the dollar index has reversed slightly. So that does give gold a little bit of hope. And even this morning, we've had a rally higher, but we're starting to see things pull back. So yeah, thinking about where that'll go from here. Please feel free to throw markets at me, as I said. So overall, this bearish decline that we've seen in the dollar index has, we've seen this bearish dark cloud cover candle on the daily chart. So that's a significantly bearish candle. And the fact we haven't been able to recapture those prices from yesterday, the highs from yesterday, does make me think that we could have a little bit of a dip to the downside. So how does that affect Eurodollar? Well, it's not down at parity, that's for sure. So we've seen Eurodollar, obviously that's about 60% of the dollar index, so that this will be really affected by that market. We've seen a bearish, almost a bearish outside candle there on Friday. This had great follow through to the downside on Monday and a fight back yesterday. So we did have that turnaround Tuesday. But is it just a flash in the pan? Well, at the moment, we've superseded yesterday's high, around about 109.84 we've been up to. We've got a little bit of support with this short-term moving average, and really we've got support coming in at 109.10 from a horizontal perspective, or rather from Monday's low. On the shorter term charts, the hourly chart is within the Ichimoku cloud being capped, prices being capped at the moment, but above the Ichimoku cloud on the 4-hour chart, so a little bit of hope there. Cable, we've been a bit more positive on this, obviously because of the inflation number outperforming or beating expectations this morning. Then we've had a bit of a push to the upside on sterling, with obviously that threat of inflation potentially leading to further rate hikes. That's what it's about at the moment. That's the real main story out there. So Tuesday's price action was more positive, bullish engulfing candle, and we've seen it price action break through that previous band of resistance. I'm going to remove that for the minute and just show you how positive sterling has been. We had this potential for a double top formation, still have it at the moment. Really needed to break that neckline at 123.44, and we haven't. We've bounced in front of it, so that looks quite positive for sterling dollar at the moment. So maybe a little bit of a follow through to the upside. Morning, Mark. Mark's asked for a couple of markets, sterling yen and euro yen, and also asking about a head and shoulders formation on the euro yen. We'll take a look at that. Let's take a look at that now. This is the daily chart, and if we look at the daily chart, we can see where we are. We're back up towards the highs from last October, and this has been a pretty decent rally really since the 6th of April. We've had a real positive move higher, euro strengthening, yen weakening. This doesn't look like it's slowing down either. All the moving average lines crossing over to the upside and looking pretty positive. So we've even got if we look, we've got a golden cross that occurred 7th of March. So although price action has been below there, still a significant push to the upside. Let's break it down onto the shorter term charts. I think this was a chart I looked at yesterday, which I really can't see how this is an Elliott wave, 5-wave impulsive move. For me, it shouldn't look anything like that. It's the last move, or the most recent move on a 4-hour chart, should be looking at this here, not this type of formation. Anyway, we'll let me just remove that, because that for me is distracting. So on this, we've got price action, and we've superseded the swing high from Monday. That was 147.45, and breaking up higher, trading at 47.54 at the moment. Again, really, if we're looking at where are the support levels, well, for me, support would be now 146.67 all the way down here. This will be the dip from Monday. Also, we've had a higher low posted here with a nice bullish hammer candle on Tuesday at 2 o'clock. So positive overall Let's see what Mark's looking for this head and shoulders formation. I would not say there's a head and shoulders formation that's obvious here. Yeah, maybe you can sort of like give me an indication where you're seeing that, which obviously if you're looking at a 1 hour chart, but you're looking at maybe this inverse head and shoulders mark, then that's a little different story, but you can see it better probably on maybe a daily chart or something. But overall, we are at those. Let's get the weekly chart up there just to sort of like break it down a bit more. So for me, if we're looking at the most recent weeks, this is clearly in an uptrend. Head and shoulders formation. If you're talking about, oh, sorry, you're talking about the last price action, taking it out. So the last few hours has sort of negated that. I can see the sort of shape you were looking for, maybe something like this neckline up here, and it's obviously this price action punching through the highs has negated it. So I get where you're coming from. So for me, that the main thing I'd be looking at is really anything to the upside, looking at buying dips until we get some sort of significant break, as I say, of that 146.67 level. But plenty of support below. We're breaking away from the cloud. That always like seems to, prices do overextend from natural support, and I would say that Ichimoku cloud is a natural trend support. So I wouldn't be looking at anything else but enjoying the upside on that, if obviously if you are long of it. Sterling yen, let's take a look at that. Again, you can see this is like absolutely ruined any thoughts of a stall in price action on the 1 hour chart. The latest figures have, we've seen prices explode to the upside. From a technical perspective, it almost feels like it knew the trend higher was quite pretty ingrained. Look at the 4 hour chart as well. Since we broke through the Ichimoku cloud, it's been a great supportive indicator since then. And yeah, we're really moving up into resistance levels not seen since December. 169.24, not far away. Feels like that could have been a nice little potential buyer break there. Obviously, in hindsight, it's easy to say, but yeah, let's move on to the next one. So let's take a look at a couple of indices before I dive into the gun to head. I'm racking my brain to think where I see value in gun to head this morning. I might go for oil again, but oil inventories out later. Is that the best idea? Probably not, Stevie boy. So daily charts on the FTSE. We had a bearish, little bit of a pullback in indices. Never believe it. Bullish engulfing candle here. And we've seen price action yesterday, or the day before. Yesterday was like a bit of a hanging man candle, bearish outside candle here, or engulfing at least, and looking for a little bit of downside now after quite a influential rally higher. Looking at the DAX, a really positive day yesterday, and again we've seen a little bit of a pullback this afternoon. Obviously, the thought of interest rates in the UK hampering that. On the Dow 30, indecision continues. So we've got resistance coming in around about the 34,120 level, support probably around about 33,711. Price is sitting somewhere in the middle of that at the moment. The trend remains higher, but the short-term charts are obviously seeing a little bit of a pullback in that. If we look at the 1 hour chart on the Dow, potential for a nice double top formation here, but we need to see a break of that 33,700. Nasdaq, that's had a bit of reversal. We get back to the daily chart and see that we've seen that indecision over the last 3 days of price action, these doji candles, and now a little bit of a swing to the downside. I think we were sitting here yesterday and we saw it was looking quite positive, and it did have that pullback into the close. So really struggling at these levels, the indices. But you're a brave man to sort of like sell them until we get some little bit of confirmation on the reversal. Again, same sort of price action in S&Ps. We've stalled at that 4,175 level, which was a previous swing high from the 14th of Feb. and reversal, doji candle, bearish engulfing at the moment. So we are seeing a little sign of indices slowing down. The old inflation monster rears its head. So let's dive into that, shall we? We'll talk this part of the show. We take a look at this is where myself and Joe normally we look at the markets and we pick a trade idea on the spot. We've got no choice. We have to enter at market. We have to have a risk reward ratio of at least 2 to 1. We have to set a stop and a target for that live trade, which goes live, and we close it out at 9 p.m. The reason we close it out at 9 p.m. we don't want that overnight risk or overnight charges, so we risk 1% of capital on a forced trade idea. And the idea of this is that this is not how you should be trading. However, we haven't done too bad. Historically, we've done this on a, we'll call it a demo account. Since the start of the year, we decided to go live on this, and we started with a 2,000. You can see net asset value 1,998. So we've lost £1, £1.76. Feels like a bit of a waste of time, but I'm sure you've sort of like seen how we've handled this over that time, and we can see yesterday. I lost $20, so I lost 1% on my oil trade idea. Joe was only down by about £3.50 on his silver trade idea. Let's see if I can get those trade ideas up. Just bring them up. Sorry about this. Should have had it ready, shouldn't I? Yeah. So here we go. You can see this ideas. Joe's silver topped out in the short term, looking for this head and shoulders formation silver, and you can see it's bobbed along. And he's, he would have been better to sort of let that run, but we can't do that, and it closed out and it's broken to the downside. So nice spot there, Joe. Still potential in that. Now this is really, really annoying. It did break down to not far, about 50 cents from my trade idea. My stop was 40 cents. So I was around about just under 3% on side on this trade idea. And I was watching it live, and it was a bit frustrating to see that reversal happen at 3 o'clock yesterday. And eventually it was stopped out, which was a shame. It was only just stopped out. And then it closed on side, and still, and again, it feels like it was a good idea to the downside. But however, if you think about it now, it's in a different position. So markets have changed, and we have got to take that into account and really look for the next one. So I'm a little bit negative on. Let me see that I like looking at the 1 hour and the 4 hour together with a cloud formation in the backdrop, because that I like to sort of like go with breaks below the cloud or above the cloud, whichever way we're looking at taking a trade idea. The 4 hour chart seems to be supporting the indices at the moment. So let's have a little look at commodities. Yeah, commodities for me on the downside. They look a little bit negative. They're having a bit of a pullback at the moment. That silver trade idea from Joe's still looks pretty prime. And oil, we're going to have a huge amount of volatility in oil. Natural gas, which we didn't look at, has continued its break higher, so that's looking pretty solid at the moment. So I'm going to dive into FX and do one of these. Let's go onto the Oanda chart, so it's a bit more straightforward. Dollar yen looking quite positive at the moment. Euro Oz, Euro dollar, sterling. I don't really want to touch sterling. It sort of feels like you've missed the boat on that if you haven't already got on it. Aussie CAD. Yeah, nice one. What about this dollar Swiss? Let me take a little look at that. We'll be below the 4 hour Ichimoku cloud. We've broken down. We've reversed quite sharply over the last hour, formed quite a nice negative candle there, and we've got a little bit of support down below. Going to just like scroll through these. see what we got. Now this is a nice one as well, dollar CAD. Bit of a evening star formation. Price is rejected at that level. Yeah, why don't I go for this? Short position in dollar CAD. I can have the stop there, and I can look for some downside. Something around about there wouldn't be a bad shout for a day intraday trade idea. So looking at selling at market, let's take profit stop loss. We want to risk 1%, and we want our stop set 134, 23.20, and targeting a move to 133, 438. That gives us a 2.3 to 1 risk reward. So let's go for that. There we go. That's the levels we're in. We've seen this. Let's summarize what I've just looked at. We've seen the downward trend. We've seen the 200-day moving average as capped price action today as well. We're back below it. Did it yesterday. Prices have sort of bounced from this 133 level, and they seem to have sort of like run into a bit of a brick wall at that 134.23 and reversing lower. So yeah, not a bad one to start the day. So let's move on from there. Just finish off the show with a reminder of what we've got coming up. 3:30 US oil inventories, Fed beige book at 7 o'clock, and events for the rest of the week, or well, for this week and for the next week is the global PMI data on Friday, US GDP Q1 advanced reading on the 27th, and the Bank of Japan policy decision on the 28th. So that's a wrap there. Thanks for joining me, and look forward to seeing you again tomorrow. I hope you have a good day and good luck. Cheers.